Hello and welcome to BQ Prime. A very good morning to all the viewers. I am Hiral Dadia. Clearly, if you see in terms of where markets are concerned, there is pressure that is building in today's session as well. In fact, you have the Sensex, which is below the 63,000 mark. We are seeing cuts of almost nearly 300 points coming in there. Let's quickly look at the Nifty as well. Overall, below the 18,700 mark, cuts of 0.4% coming in there. And similar are the cuts in terms of Bank Nifty as well, where we are below the 43,500 mark already. Now, what's moving in trade today and what could be buying opportunities? Joining us on the show is Avinash Goraskshakar to discuss more. Avinash, good morning and welcome to the show.
Yeah, good morning, Kiran.
Avinash, let's start with a couple of counters which have been, specifically from the broader markets, which are seeing a lot of moves in today's session. HDFC AMC, you had Aberdeen, which actually has exited. And in spite of the exit, now you're seeing that the stock is nearly trading. It was trading with gains of almost a little over 7%. What would you advise an investor to do? Because it seems that an overhang with regards to further selling is gone from here on.
Yeah, exactly. I think, Hiral, you are absolutely right. There was an overhang, in this counter largely because of this likely sell-off. I think now with the deal complete and a new set of investors coming in, I would believe that, the stock overhang is now, something of the past. And I think this would not hamper the moment. In fact, once the deal was complete in the morning, you saw a good bounce, thereafter. See, our sense is that within the AMC business, despite fresh competition coming in, HDFC AMC has one of the best kind of operating metrics, a very good geographic reach, a very strong balance sheet. So I think, in the next, say, 2 to 3 years, scalability is not going to be an issue. Although the stock has struggled, because of moderate to steady, kind of numbers, which the street did not like. But I think overall, if one were to take a longer term view, I think even at the current odd levels, if one were to take a long term view of at least 18 to 24 months, I think one can decently expect a reasonable risk reward here. The stock is definitely expensive, but I think it demands this kind of valuation premium considering its size and its stature in the market. So I think from a long-term perspective, investors could consider this. My sense is that most of the overhang and the negative downside for the stock is now complete. So I think from now on, you could see a decent rise, going forward.
Right, so decent rise that could come in terms of HDFC, AMC. But moving on, HDFC also is in focus, and this is mainly on the back of the 90% stake sale in HDFC Credila. What do you make of this?
No, I think this was on the cards, Viral, because as per the regulator, I think before the merger, they were told that whatever investments the HDFC Bank had in its subsidiaries, they had to mandatorily have a stake of little less than 10%. And I think the deal has got a reasonably good valuation of almost 10,000 crores plus. So I think after nurturing this business for a long time, HDFC Bank has monetized it. So I think market would definitely look at it quite positively, considering the fact that this was not a core business for HDFC Bank, but I think they got a good deal, and I think things would look much better now, considering that the new owners would obviously drive its growth, and this customary stake of HDFC Bank would continue. I think that would be more like a small investment on their books, and the market would obviously now look at what kind of growth comes from their core business, which is I think going to be the growth driver once the actual merger for the bank takes place, possibly in the next say 3 to 4 months.
Right. Avinash, looking at a Timken India, the share tumbled after a large trade, and you have the Singapore parent, which has gone ahead and sold stake. Number one, what would this actually mean? And two, what are the fundamentals indicating?
Yeah, I think, Hiral, if you look at the bearing market, it's a very closed market with very few players. And I think Timken has also shown very strong operational numbers on the fundamental side. So I think this 8.5%, stake sale is definitely a surprise. But I think we would have to see at the end of today's trading that who have been the buyers for this, block which was put out, by the Singapore parent. My sense is that on a fundamental basis, any dip in the stock should be used as an opportunity because looking at the kind of growth in the commercial vehicle, passenger car market, where Timken is very largely present, plus their global reach, it's no doubt that this company should do well. So I think this OFS, this blocks deal, sale which happened today. Normally we see stock prices correct after such deal happens in the market. So it's not a big negative surprise. I think investors who want to chip in for the longer term should actually use this weakness to add their positions in this stock, which I think should do very well over the next couple of years.
Right. So that's with regards to where Timken goes. Now, moving on to Aether, recently the stock actually hit a 52-week high as well. And now, if you see in terms of Aether, we're looking at a QIP to raise funds. Overall, what's your view in terms of the fundraise? The price is somewhere in that range of 930 to 940 rupees per share. And recently, they've done a couple of tie-ups with Aramco as well.
I think the Aramco tie-up is definitely a very positive development for the company. They have imported the polyols technology from Aramco Technologies, and I think this is going to be a pretty good game changer for them. In any case, the kind of product categories where Aether works is basically specialized categories where there's a limited amount of competition. There's a decent amount of pricing power for them. So my sense is, obviously the fundraise is obviously going to, give further ammunition to them to look at a lot of inorganic opportunities, plus, fund their existing kind of capex and working capital requirements. So I think longer term, Hiral, this company should do well. I think ever since they went public, their focus has been on the higher end specialty chemicals and not the commodity piece. So net, I think definitely longer term prospects appear to be good.
Right, so that's her long-term view coming in there. From the aviation space, Avinash, you have a Indigo that is in focus in the month of May. Little over 60% is what they've seen in terms of market share, almost two-thirds. So good growth coming in there. And now the 500 Airbus order, they already have I think, if I'm not mistaken, a little over 450 aircraft order backlog. How do you look at this, and how are you seeing a Indigo from a stock perspective?
Yeah, I think the order for 500 planes, Hiral, is definitely a major, gigantic order. But you must understand that these planes are going to be delivered over a pretty long period of time. So I think my sense is that unless the market gets a hint as to what is the actual delivery schedule of these aircrafts, because typically the schedule which has been given by the company has been pretty long, almost 2025, 2030. So I think looking at the kind of growth Indigo has recorded and the kind of market share it commands, my sense is that India has become a very strong aviation market, and the presence of a 60% market share obviously gives it a lot of dominance, and most importantly, it's able to cover up its fixed overheads quite well because of the geographical and the aircraft reach. So I think net, if the stock corrects little, maybe that could be a good entry point. I would suggest there's no need to hurry just because of this news flow, because this is just a sentimental booster. I think actual numbers would actually drive the stock moving forward, but we are positive on the stock and we look forward, for earnings over the next, say, 1 to 2 years.
Right. From the brokerage pack, you have IIFL Securities as well as IIFL Finance, both the counters trading under pressure. And this is after the SEBI has slapped a 2-year ban in terms of the stockbroking unit. And yes, this is an old case. How are you looking at it? Because in terms of number of clients, IIFL is still in the top 10, though on the lower side of the band. How do you think it will impact business?
No, I think, the ban for not taking clients for 2 years is a major setback for the company, because that means that other, players like Angel One or maybe HDFC Securities, which is in the unlisted space, could obviously get a share of the market. My sense is that, the company has released a press release saying that they would appeal against the order, and it's an old order where the rules did not apply. But I think till that time, it's better to stay away, rather than looking at, buying a falling knife. I would say that let some more clarity come in, because the stock has actually been down by almost 17 to 18% today. And I think, buying such companies at such levels, unless and until we get some more clarity on the matter, I think it's better to stay away. I think existing investors should hold on. They should also not panic. But I think obviously if this order is fructified and actually goes through, then I think it's going to be a little, damaging for their business, because next 2 years they won't be able to add any incremental business. Of course, the existing customers would obviously continue, but this is definitely a major setback for them.
Right, so stay away right now, at least from the twins. Moving on, Gokuldas Exports has had a beautiful run over the last couple of years. In fact, a 250-point up move in the last 2 years. Clearly, if you see in terms of the ready-made export data, last 2 to 3 consecutive months, we've seen a decline. Now, the key concern over here coming in is there demand in US as well as Europe? Are we going to see restocking happening? Because clearly the markets were excited lately with regards to where the raw material price downtrend was concerned. But a major concern from a demand perspective, how are you looking at the textile pack as a whole and your view on a Gokuldas?
No, I think these numbers which you mentioned, Hiral, are definitely disappointing because the market was looking forward for better numbers for most of the companies exporting to the US, especially home textile segment, which has been doing very well. Looking at the kind of macro numbers which have been generated by the US, my sense is that this could be a temporary dip, and there's nothing more to worry. But I think we'll have to observe for more additional data for the next couple of months. Cotton prices have come down. That's the big major positive, and I think that would obviously trickle down into better EBITDA margins for these textile exporting companies. So I think it's better to wait for some months. Nevertheless, we continue to be positive on the textile sector, especially for companies exporting to the US and for the home textile segment. So Gokulda's exports, I think one should hold on. I would not suggest investors to sell out in panic, but at the same time, some monitoring over the next couple of months on the textile export front is necessary.
Right. From the PSU banking space, you have a Bank of Baroda, which is actually running at a different speed altogether. In fact, yesterday it crossed the 1 lakh crore market cap as well, second after SBI. If you see in terms of Bank of Baroda, clearly they've been able to actually get management profiles from the private sector. A lot of positives coming in from, the transition happening to the retail book as well. How are you looking at a Bank of Baroda, and do you think good levels to enter?
Yeah, I think Bank of Baroda has done a lot of work on the asset quality side. The legacy asset book has been completely cleaned up, and I think they have spent a lot of money on technology, especially on the fraud management kind of technology areas. So now I think the bank is looking forward for a very solid kind of growth. And with the credit growth in the system of almost 13-14%, my sense is that the balance sheet growth for Bank of Baroda in the coming 2 years would be quite strong. A strong corporate capex growth, a strong retail growth would obviously aid the bank. And in terms of size, I think after the merger of almost all the PSU banks with Bank of Baroda, I think definitely their geographical reach and their expertise and obviously their reach to the customer are increased. So I think from a longer term perspective, yes, a good risk reward is possible, but I think you need to understand that it's a slow mover and it would probably take a little more time. So next 12 to 18 months is the time frame which investors should look forward.
Right. And very lastly, from the IT pack, you have a Coforge. Now, they did have an investor meet as well. Clearly, the growth plan that they laid out is seeming to not enthuse investors, and the major concern coming in is the demand uncertainty. Though we've seen a good rally in terms of mid-cap IT counters as well since lows that we saw in April. What's your view?
No, I think we believe that Coforge, I think definitely should do well. But as of now, we have a hold on the stock. And as you rightly mentioned, the analyst meet which was held recently, the management sounded a little cautious on the demand environment. They also cautioned that the recovery in the second half of FY24 also looks a little questionable, although they have maintained 13 to 16% overall guidance, and they expect almost 45 to 50% of their revenue to be generated from their existing customer base. So I think in the near term, there the headwinds would continue at least for the next 1 or 2 quarters. So till that time, I would believe it's a hold. I mean, fresh buying is not advisable. Clearly, the management seems to be a little worried about the the headwinds which are prevailing in the US markets, where a large part of their business comes in. So I think it's a hold. But yes, longer term, I think definitely one could look at it. But as of now, fresh buying is not advisable.
Right, so fresh buying not advisable at current levels. That's the word coming in. Thank you, Avinash, so much for joining us on the show and giving us those views on the stocks that we've discussed. But overall, there is pressure in terms of where markets go at higher levels. We are seeing profit booking that is coming in, and that's an interesting trend. In fact, expiry is also pretty much near, so the volatility is expected to remain high. That's all that we have on this session. Thanks for watching, and lots more lined up on the other side. Please stay tuned to BQ Prime.